Hello, this is Matt on the Moon Lambo channel. I am not a financial advisor, so not offering financial advice. Definitely no financial background whatsoever, so don't buy or sell because of anything that I say, alright. Cool? Alright, cool beans, man. Alright, let's continue here. What are we talking about today? Well, here's a story from MarketWatch.com titled, "The Stock Market is Poised for a 40% Drop," warns economist who says the current climate feels a lot like 1929. And we know what happened in 1929, right? Yeah, depression, man. Depression era stuff getting down. Not good stuff. It took forever, literally forever, not figuratively, literally forever to, for that to recover. And there are concerns that we're entering something tantamount to that, and we could be in for a long, not-so-fun time. So, with this being an XRP-centric channel, I wanted to just share with you, from my opinion, just an additional reason why it makes sense to diversify into other asset classes, certainly, and certainly XRP, because, look, and I'm always upfront about this. I'm sure tons of you are buying tons more XRP than me. All right, to me, I only purchase the amount of XRP that I'm comfortable with in case I'm completely wrong about this. And if I look back in hindsight, I could be like, oh, darn, I guess I should have bought more. Well, you know what? That's fine, because I go to sleep very easily every night, and I want it to stay like that. And if I invested too much, I would not feel like that. I'm not counting on XRP as my retirement, but if this goes the way I'm thinking, it could be worth substantially more than it is today. I still firmly believe that. And so with this being the case here, it was just kind of interesting me to just kind of think about this concept of what does this mean? If this happens, what would this potentially mean for the crypto asset class and ultimately XRP? But before we go any further, if you would please delicately tap that like button, I would be eternally grateful. And also go ahead and subscribe to the Moon Lambo channel if you love your mama, because she wants you to be happy. And you will be happy if you subscribe to the Moon Lambo channel. Shout out to John Luciano, who tagged me in this piece, it was a tweet which links to the piece, along with a number of others in the XRP community. John, thank you very much. I really do appreciate it. And by the way, feel free, everybody, feel free to tag me in all the stuff you want on Twitter. From time to time, I like mentioning this. I can't respond to everything. There's no way I'm even going to see everything with the way the news feed works. But just know, even if I don't highlight something that you tagged me in a video, I do care. I do appreciate it. I promise I'm not snubbing you. I'm not that type of guy. And I really do appreciate it, even if I can't cover everything in every video that I put out. All right. And so into this piece now, it starts with a quote, which reads as follows: "I think we've got a second leg down, and that's very much reminiscent of what happened in the 1930s, where people appreciate the depth of this recession and the disruption and how long it's going to take to recover." And that's a Gary Shilling, longtime economist and president of Gary Shilling & Co., again delivering a gloomy take on what's next in a recent CNBC interview. And here's another quote: "Stocks are behaving very much like that rebound in 1929, where there is absolute conviction that the virus will be under control and that massive monetary and fiscal stimuli will reinvigorate the economy." And he said, adding that the market could drop as much as 40% over the next year. And he's not the only one that is of this mindset. I'm not going to pretend to know exactly which way this is going to go, but at this point I would say that I am notably concerned. The lockdown and everything, generally speaking, certainly where I live, I'm in the United States. I happen to live in the Midwest, but still throughout the United States, still a major problem here, even the beginning part of July. And I do listen to Anthony Pompliano, even though I think that his take on Bitcoin maximalism, because he is a Bitcoin maxi, I don't subscribe to that concept, but I still think he makes a lot of sense on a lot of things from an economic perspective. And he's really artfully articulated the reasons that perhaps we should be concerned in terms of where this economy is going. And he's gone into great depth on his channel in terms of just this chain effect. It's like a domino effect of what is happening as a result of this, the initial lockdown, and how it's if you think of the concept of a flywheel in motion, it's just like you can't just start this up with the snap of a finger. It just doesn't work like that. And so the concept of this V-shaped recovery, if you look on a chart that a lot of people are subscribing to still, I'm increasingly becoming less confident of that. The degree to which it gets bad, I mean, we'll see if we hit depression-era stuff. Certainly hope not here. But the question becomes, what would that mean for the crypto asset class in XRP? Well, what's interesting is for the first time in the history of the crypto asset class, we got a glimpse of what it looks like when Bitcoin and XRP and all the rest get battle tested. Because for the entire think about what was Bitcoin born out of? It was born out of the economic collapse of 2008 and the 2009 era stuff, the housing market crash, which ruined everything for quite a while, and ever since then we've just been, generally speaking, in an uptrend. Ever since Bitcoin was released, and it's not because of Bitcoin, but it just happens to be the case that we haven't had a recession since then. And now you get this situation where the entire economy shuts down, and you saw that Bitcoin did tank pretty well in lockstep with the stock market, but then you did see after the initial drop that it got back up pretty darn quickly. And I didn't check the price of Bitcoin before recording the video, but I'm pretty sure it's over $9,000 still. It's got to be somewhere around there. And you can think it dropped down to about $3,800. So, yeah, the timing of it synced up perfectly in terms of the drop, but it behaved a little differently after that. And a lot of people have speculated that just has to do with people being over-leveraged. And then you can imagine automatic selling on exchanges taking over, things to that effect, especially with the crypto markets being as illiquid and, arguably more over-leveraged, people in the crypto asset class more over-leveraged relative to those in the stock market. I've seen that point made as well. And I think it's perfectly reasonable to consider that those as being potential reasons as to why we've seen what we've seen, even though there has been some recovery to the stock market. Would you expect anything different? And Anthony Pompliano, he just kind of made the point that, yeah, this is not surprising to me. Of course the stock market has been rallying ever since the crash because money was printed in. It doesn't have anything really to do with the real economic situation in terms of what kind of output are we seeing from businesses, right? And so from a crypto perspective, it does make one wonder if you see a 40% crash, if we do, as this guy's talking about here, over the next year, what's it going to mean? Well, I'm not going to pretend to know, so I'm not going to make an actual prediction, but it's fun to think through and talk about a little. I won't be surprised if crypto behaves in a similar fashion as it did in March 12th, when you saw stock market crash as well. Wouldn't be surprised. But there's this whole concept of cryptocurrency in general being a hedge against economic tumult. And there still could be something to that. I don't think it's, we're at a point where we could say reasonably that we have enough data to just be certain of that, but it's still a reasonable thing to talk about, reasonable potential narrative. It could come to pass, right? And I could see why that could be the case. Gold is treated like that, and there are some similarities between the crypto asset class and gold that might make it perfectly reasonable to believe that would be the case ultimately. I don't know even if it does become that, though, that type of hedge, I don't know for sure that we're here now. But I can certainly see that, when things like this happen, I'll just say this, and I'm not going to pretend to know what's happening with the price action of XRP. For me personally, I can just speak for myself. This makes me feel extra good about being diversified. I really firmly mean that. And we'll see what happens. And like I said at the beginning of the video, okay, fine, I don't know what's going to happen with this. I'm not counting on this for retirement, but I still believe it could be worth so much more today that it could actually still be a meaningful chunk of change to me at some point. And so, to me, having some money invested in XRP makes sense, especially given that there's real-world utility to be had, and I think that ultimately that will be recognized as the asset class matures and things are increasingly parsed out, especially by not just retail investors, but institutional money, which I think is going to take a more laser-focused approach than the average investor. That's certainly my suspicion here. Then the piece continues. So, where should investors park their cash in this climate? And here's a quote. I think we're going to see downward pressure on prices, and that works to the advantage of Treasury bonds, which have been my favorite since 1981, he said. Where's the crypto talk? Well, I wasn't expecting that. Schilling laid out his prediction in more detail earlier this year. explaining in a Bloomberg News op-ed that while many economists are looking for a V-shaped or quick rebound to deliver a sharp recovery in the second half of the year, he remains much more skeptical. And here's another quote. This pandemic is likely to be the most disruptive financial and social event since World War II, with equally long-lasting consequences. And so that's what he wrote, citing the stark unemployment numbers at the time. And here's another quote. Many will no doubt restrain spending in future years to rebuild savings, especially since the crisis caught them at a time of high debts and short financial reserves. Yeah, and on that last part, there's a reason that I don't take on debt. I mean, I would argue I'm kind of like the Dave Ramsey mindset, and if you're not familiar with him, he's a pleasure to watch. Just Google Dave Ramsey. Dave and then Ramsey. He's a hoot anyway, even if you don't agree with him financially. And I think he's mostly on the mark. But to me, other than maybe taking out a mortgage, I have no interest in debt whatsoever. I'm not willing to do it. If you can't afford it, don't buy it. And it's okay if you disagree with me. I mean, I understand that's interestingly enough, a controversial topic, but I still think that people that more of my mindset, when things get terribly worse economically, you're going to feel that much more stress if you have that much more debt. And I'm just saying that. I understand that many people, and it's not a critique of you if you have debt, that's not what I'm just sharing my personal opinion of this, and people feel differently about it. And some people, they're very appreciative that they have the opportunity. I get that, to have a lifeline in difficult economic times. I get that. But, and I really do, I get that. I'm just not going to live my life like that. And I think that most people, certainly in America at least, have just over leveraged themselves to the hilt, and it's going to be painful if just imagine there's a mother and father working with some kids, and then they both lose their jobs because of pandemic times because the government decided to shut down the global economy. It's just going to be that much worse. These problems are going to be exacerbated. So that's part of the fear that he's talking about, and I think it's a legitimate concern. Whatever you think of taking on personal debt, the consequences of it are going to be known on a very notable way if what he's talking about comes to pass, and you're talking about years of recovery here. And I don't know. I mean, I don't think he's speaking a doomsday scenario for the sake of it. I suspect the way he talks that, because he seems to be coming from an analytical approach. That's the way it strikes me. So I suspect he really firmly means what he thinks. But that's why, again, for me, man, I don't believe cryptocurrency asset class is ever going away, because you can have business models that cannot exist without it. And I see that within the XRP ecosystem, that's certainly the case. On-demand liquidity, functionally what it does, you can't do without a decentralized cryptocurrency. I see XRP being positioned there. And I don't care how long I have to hold the damn thing to see it, whatever the next parabolic rally is. I don't care. I am Mr. Patient. I will outpatient you. I really will. I'm just not gonna sell. I don't care. Not until it makes sense. And even then, I don't think I'd ever sell all of it. But still, it's just interesting conceptually to think through here. Tell me what you think in the comments below. I do like diversity of thought. Do you think that I'm nailing it? Do you disagree with me and think that I'm an idiot stick? That's fine too. Go ahead and drop comments below. But that is it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!